So, hey, what's up, guys? Thanks for joining us today on Major Players, where I try to bring you a major player in their industry every time. And today I got my friend Sanjay. Like, he runs 33 Holdings. They're a real estate investment company, a private equity real estate investment company. And I met him a long time ago. Great guy. I was telling his partner that you guys are the only guys that were nice to me. That says something, and I appreciate that. But today I wanted to make sure to bring Sanjay with you because you guys should always connect with people who are major players in their industry, and he's definitely one of them. So thanks for jumping on with me today, man. I really appreciate you.
Thank you. Thank you, Victor. Appreciate it.
For sure. So do me a favor, Sanjay. So like for everybody listening, why don't you go ahead and tell me a little bit about 33 Holdings, what you guys do, and things like that.
Sure, we do. So 33 Holdings is a boutique private equity real asset investment firm.
Hmm.
We play in the majorly in the real estate space, but we are also getting in infrastructure as it relates to the digital infrastructure in data center AIs and some energy related ventures that we are doing in. So we position ourselves more as a real asset investment management company, with
Right.
majority of our focus being in the real estate space, in the housing and industrial outdoor storage space.
Okay. All right. And how long have you guys been doing that? Has it been
Oh, it's
pretty
been
recent?
about 13 years now,
Okay. You
close
said
to
8?
13, 13 years.
Oh man, I'm sorry, man. I don't want to cut off 5 years of your life. That's not fair to you, man.
Um,
You earned those. Okay, all right. So right now, you guys are doing where are you guys investing at right now? Where are you guys some of your projects?
yeah, most of our projects are in the Southeast area,
Okay.
with Atlanta being the center of it.
Mm.
So any state that touches Atlanta is where we are open to do projects in.
Okay, all right, for sure. So, and you guys, and I know we met at the Pitbull conference years ago.
Mhm.
So, and again,
Yeah,
that's my
years ago.
first, yeah, my first segue into kind of hanging out with you guys. So I appreciate that. So, my bigger thing, especially getting into private equity real estate, I got my fund. How many, you guys are already on multiple funds, right?
That's right. We have like an hold fund, a flip fund, and now we're
Mm.
converting that into more of a private credit.
Yeah.
And then we have an opportunity zone fund.
Got it, got it. So, question for you, man. Like, how did you get into that? Like, were you always into the real estate side or were you doing something else?
I'm a technologist. I'm from
Mm,
India originally. I came to the US to get my master's in engineering management.
yeah.
I came to Toledo, Ohio, and very soon I moved to California. I was
Mm,
working for Oracle Corporation, trying to pretty much in their consulting division travel through the US, implementing HRMS systems for higher education and healthcare clients.
mm,
And through that journey, I ended up being in a growth mode company that does digital marketing.
yeah.
I joined them early on. I was part of their growth, and a private equity came in and bought this company.
Wow.
And through that acquisition, I had the option to literally have a good payout for 18 months. I was among one of the senior folks at the company that I was working with.
Mm,
So I had a good 18-month payout. I shouldn't be doing anything in the industry.
right.
So I was basically handcuffed, but I was getting paid to do being handcuffed. So I said, okay, I'll take that.
Right, right.
Um, and then early on, um, I was 3 months, I didn't do anything, but then I was bored to death. I was more scared to death
Mm,
what would happen later on. So I said, okay, let me delve into something. That's when the whole foreclosure crisis was hitting in 2008, 2009, if you remember.
yeah, yeah.
Uh, and then towards the lag end of it, 2012 is when I happened to see a HUD auction property in my neighborhood with the
Mm,
HUD sign.
yeah.
Um, and then I read somewhere in the newspaper that HUD was selling homes for $1 in Detroit.
Whoa.
Uh,
Okay.
that kind of attracted my memory on HUD. And then I saw the HUD board in my neighborhood.
Mm,
I'm
yeah.
like, okay, I basically called that number. And on the other side was this man called Corey Oldno on the other side of the phone.
Yeah, yeah.
Uh, and since then we hit it off. We were in the same stages of our life.
Yeah.
He the deals, he didn't have the capital. He
Hmm.
went through the foreclosure crisis, so he has been in a lot of pain and a lot of challenging times.
Right,
So
right,
when I saw the opportunity and said, okay, why don't I get you money?
right,
And then I was raising the money, pulling the money, all that, and then he was bringing the deals, and we were kind of picking back off each other.
right, right. Man, and
Then
that's a great partnership. I always hear that, and I noticed that like as I got into this space, it's like you have an
Mhm.
acquisitions guy and then you have your capital, your money guy, right? So that way you're good
Oh,
partners, but there's a synergy with that. And I noticed that with you guys because you guys were laughing and having a good time. So that's super cool.
uh,
So did you guys
yeah,
buy a lot
yeah.
of
So that's how
properties?
we started.
Yeah. Did you
Yeah,
guys get a lot of properties that time during that time?
yeah. We used to buy and flip a lot to American Homes for Rent,
Mm,
Invitation Homes, and all these big boys.
right,
And then
right,
very soon um, why don't we hold these properties? Because we saw that the way Wall Street was underwriting these, how they had no clue what was happening on the ground.
right, right.
They were relying on third-party
Mm,
valuators and everything. I don't think none of them knew the dynamics of the business because
yeah, yeah,
it's a very local game. You
right.
can't just be in Wall Street and deploy money. So
Yeah.
we felt a gap in the industry, and then very early on we came on to fill that gap
Hmm.
of basically aggregating about, I think we started with a portfolio of 150 homes,
Uh-huh.
and then we packaged it, and a
Mm.
company by the name Amherst Capital, they're based in Austin,
Okay.
um, huge firm. They basically gave us a good payout, and
Mm.
we did a good exit in 2019,
Mm.
um, for all the portfolios we held and everything. These are all
R-
single family scattered homes.
Right.
Um, so we've done pretty good on that first round. Of
Yeah.
course,
Yeah.
a lot of learning lessons, and then we said, okay, single family is great. Now everybody's coming into single family. How do we diverse into other things?
Right. Right. Exactly. Did you guys get into multifamily stuff like that? Some bigger multifamily deals as well?
That's right. We went into a few theses. We did industrial storage.
Okay.
We put some on that. That worked out very good. We also did more build to rent. Even
Mm.
that thesis was working out good.
Yeah.
We went into this asset class on the scattered. We went into multifamily in Birmingham,
Okay. Yeah.
but that did not go well for us because we were caught in this last 2 3 years of the debt cycle that gets challenging on the interest rates.
For sure. Birmingham's a tough cycle market as
It is a
well.
tough market too.
Yeah.
So we did not realize that going in. Probably we learned our lessons. Now we're doing our best. We have two more apartments there, so we're trying our best to get out of those.
Yeah, yeah. Man, that's interesting because again, you know, I started off in Texas just as an individual and I learned in like the late 90s. I was a kid and then I
Mhm.
started, I bought apartment buildings all through 2008, 2009, but again, I didn't know we didn't know that it was a crash. It just looked like it was happening to me. So with all the
Exactly.
properties I had,
It's normal.
it felt personal. But so how are you? I mean, how were you growing up? Like, did you come from money or did your family was around money? Like, how was it growing up for you?
So I grew up in India.
Hmm.
Luckily, my dad was an engineering graduate, so he was retired as a general manager of a chemical factory.
Okay.
So we were better off in India. Usually in India, it's a different ball game. You have a driver, you have a servant, you have all these
Mm.
things, handle a lot of your things.
Yeah.
So the thesis was more about the aspiration to come to the US, the
Mm.
aspiration to do something. That's
Yeah.
what got really pulled us into it. And then, as I told you, I had an exit from my digital marketing, like where I was employed.
Hmm.
When the non-compete came, it was a perfect opportunity for me to try something that I always wanted to.
Right. Right. And you said you were with Oracle, you said?
I was initially with Oracle for a good amount of years, but then I moved to this company called Yes Mail,
Okay.
which is a digital marketing company.
Yes, mail. Yeah.
Mhm.
I've heard of
They
them.
basically they do email marketing.
Yeah, I've heard of
They are among
Yes
the
Mail.
initial pioneers of uh, doing all the analytics and all the digitization of email and the
Mm,
personalization.
got it. Got it. So how was little Sanjay? Were you like a motivated kid or were you know what I mean? How were you growing up?
If I recollect, I was a naughty kid. I was the spoiled brat usually on the corner.
Bad boy.
Yeah. But I was good in studies. I always got good grades somehow. I pulled it through.
Yeah.
Um, but I was mischievous, as I was called a lot.
Yeah.
Uh, Never
Like what?
the
Like what's mischievous? Like what do you think? What was one of your most memorable mischievous moments? Like if I talk to your parents, they'll be like, I remember this one time with Sanjay. What would that be?
on my skulls, I have a lot of these injuries, if you see. Like
Yeah.
growing up, you're running around in the field wild and you just fall off and hit your head and blood
Yeah.
is coming and all these things. So in that run, I was pretty wild, right?
Okay. Yeah.
I would just do things when I want to do, right?
Yeah.
And now I relate back to a lot of the things. There was this intense energy in me just
Mm,
trying to get expended, right? To
right.
do something.
Yeah.
Uh,
Yeah.
um, now I can understand that form of energy. When I see my son, I see somebody else. Now I get it. I was like
Yeah.
that.
You be like, okay, I did that. It's interesting too, and I talk about this, everybody that I talk to, I find that everybody has like an experience in their life where they're like, okay, it's time for me to go succeed and do something, or it's exposure. Like you said,
Exactly.
families talked about money, they read Wall Street Journal to them, whatever. What was that for you? Did you have like a big experience? I know it was like, okay, I wanted to leave, or was it exposure to like success, like working at these companies and like kind of expanded your mind and it was a fit? Which one was it?
Ours was twofolds. Um, Coming from India, India was a very largely populated country. The
Yeah.
number of jobs were relatively less. For one job, you had literally 10 or 15 people competing,
Mm.
right? So in India, it's always the survival of the smartest,
Mm.
right? So in order for a given individual to succeed in life in India, no matter where you come from, you need to have good education. You need
Right.
to have an engineering degree or a doctor degree. Only those two usually count as the cool jobs.
Right. Right.
But it was this whole wave of exodus of people coming to the United States for the Y2K problem and all these things.
Yeah.
Right? So I was in luxury. Like my dad, we had cars, we had everything taken care of and everything.
Yeah.
But my thesis was my dad was working 9 to 5 job. I
Hmm.
remember very vividly, very in my teenage age, he had to switch his jobs, and there was a 3 month gap in between jobs for him.
Yeah.
And I could see the difference in all the company perks we had in India. They give you all the company, they literally make you a slave to the company
Yeah.
by
Yeah.
making you everything. As long as you're working like 20 hours, nobody cares.
Right.
Uh, I figured, how do I do what my dad had, but do it on my own terms versus being at the mercy of some company?
Mm. Okay.
Right.
That's
So
huge.
that really triggered for me in saying, okay, great. My dad could fly first class and all these things, but it was always on the company's dime. And the company, if they're out of business or if they did not like my dad, they would just manage him out, and then all the perks would go away for us, right?
Right.
And then
Right.
the company would come and then we get all the perks.
I see. It's kind of this up
So
and down.
up and down. And I'm like, this is not fair. This is not how things should work.
Right.
Okay, then I figured, not then, but later on, as I came to the US, I was again doing a job here, but I always had that incline in me to get into the entrepreneurial world.
Right.
And luckily, I had opportunities at my digital marketing company when my wife got a job in Atlanta.
Hmm.
We were in Portland, Oregon. I literally told the company I need to move out because my wife is moving to Atlanta. I need to be in Atlanta too with her,
Right.
because Portland was a great place, but it was not the best tropical climate for me because I was coming from India.
Yeah. I can
I
imagine.
needed more warm climate and everything. So I said, look, the company told me, look, why don't you go and start something in the Southeast? We need an office there. We have clients there. Why don't you go open up an office? I'm like, oh, this is nice to do a startup on someone else's dime, right?
Yeah. Yeah.
So that worked out, and very soon we built a team of about 15 people with client services,
Mm.
account management, engineering, implementation, and everything. And I was catering to the entire implementation team in worldwide.
Hmm.
I was running global teams in India, in locally here in the US.
Oh, wow.
And I'm like, man, I didn't spend a dime, but I got to do all the work. Of
You
course, I didn't
build a
get the
huge
profits
company.
too.
Yeah,
Yeah,
yeah.
for them. So when the private equity came and bought out,
Hmm.
it was structured a certain way that I can't use the IP elsewhere. I don't can't go all that
Yeah.
stuff, right?
All your non-compete.
Yeah, non-compete. So I'm like, oh yeah, let me try something, and that's what led me to this listing in my community, and that's what led me to Corey, and
Yeah.
then Corey me hit it off, and we just went on and on through the journey.
Wow.
It was an interesting journey.
Yeah.
Lot of lessons learned. I don't think it would have made us a better person unless we have gone through all the pains we have gone through.
That's right. That's right. Which one do you like better, engineering or real estate, or is it pretty much the same thing?
Frankly, my heart was never in engineering. I was just
Mm.
getting through for the grades to get it through. I
Yeah.
had
Yeah.
no clue what I wanted to do.
Mm.
I had no clue what my larger stuff is. But frankly, now being in the business, I enjoy the business more.
Yeah.
Uh, it's been painful getting to where we are.
Yeah. Yeah.
Now that we are here, I think we enjoy it. We do it more like play.
Yeah.
It's
Yeah.
fun.
Yeah.
It's more like comes very natural incline to us. Now we are expanding into data center AIs. We're expanding into some energy theses. So
Mm.
I think the horizons have larger.
Yeah. Yeah.
The way we can conceive something and go about putting effort, capital, teams, everything together to make it happen is just amazing.
Yeah. Yeah. How do you guys do that? So, like, because I have a fund. It's a first time fund, but I've been doing real estate for like 27 years. Multifamily real estate, all that stuff, from Texas, Hawaii, a bunch of different multiple markets. So like putting together your capital team because you kind of deal with the capital. So like when you put in your
Mm.
capital team together, you have your what? Your investor relations team, or capital markets people who deal like how have you structured that to where it runs seamlessly aside from scripts and investor lists, things like that.
Yeah, you'd be surprised. I am the capital man. That's it. I'm the investor relations. I'm
Mm.
the everything right now at this
Hmm.
stage. But now we are trying to hire right now, right?
Right,
As
right.
we speak, with the growth we have seen and everything. Um, until this point, a lot of our capital came through friends and family,
Uh-huh.
country club, um, and lot of connections we know. Very retail type capital. We
Hmm.
have raised about $65 million to date.
Nice. 64?
65.
65.
Yeah.
65.
65
Man,
million we have
congratulations
raised.
on that. That's huge.
Yeah,
That is
thank
huge.
you. And that was through a couple of different funds, different projects, different rounds, exits happened. We've done amazingly double-digit returns throughout.
Yeah.
And that's kept the thing going. So a lot of capital to date was very retail oriented. The
Hmm.
last few years, we got some hits because of the debt markets changing.
Yeah, yeah,
Uh, so we have taken some hits in the multifamily in Birmingham,
yeah.
and we just trying to get out of those and
Get
then
out of
figure
those.
out through yeah AI and the digitization and the tokenization thesis we want to do on all
Yeah.
our fund.
So how much like and this is just for just my understanding for me. Like how much like assets under management did you guys have under like the whole career? Like what do you guys think that your full thing was? Couple
We
hundred mil?
had at peak $125 million under assets under management.
Nice.
Um,
Okay.
we basically sell half of our assets
Hmm.
and keep only half usually
Right, right. That
because we
makes
need to
sense. Keep cycling. Yeah,
dividend
you
everything.
gotta you gotta get your investors some money. So
Yep.
yeah, everyone likes you when you can do that. We did that too. It was like that's our whole strategy. Buy, refi, recap our investors and just hold long term. And then if we
Mhm.
that's where I screwed up with my assets in Hawaii. I shouldn't have sold our apartment buildings. I should have refinanced again. Yeah, just hindsight
Oh,
2020, right? So that's good and it's cool. So are you thinking about ever doing like I'm retail investors as well. So are you guys thinking about ever moving into like family office or anything like that or fund of funds or things? Are you guys thinking about those things as well as you move into like data centers and whatnot?
at this point, we are really going
Mm,
after the high net worth individuals more. from a retail perspective and more
Yeah.
family offices and institutions at this point.
Mm.
We
What do
just
you think?
started the capital raising process
Yeah.
in the last two.
Okay. All right. Man, I've been kissing frogs and raising capital over these last couple of years, but as things change, probably like you guys have seen, um,
Mm.
I started raising capital, but then the market shifted. And then I watched, like everybody, we watched the rates jump like 5 times in a year. And I was like, I'll wait. Which was good because, a lot of people that door shut on them and they couldn't get out, they couldn't hit their returns and they either lost or they're still trapped in
Mhm.
deals and their investors and redemption periods are up and it sucks. So for them, I came out unscathed because probably like for you guys, when you've seen it before, it matters. That's so what do
Mhm.
you think some of the mistakes that people are making like now? Like maybe coming out of this, do you think some of the people, because you're the capital raising guy, and I mean, but you also have to sit it on those deals because you got to know what to talk to your investors about. What are some of the mistakes that you see that people are making doing that right now?
Honestly, we've been so busy in our own world, we hardly get to see what others are doing.
Well, you
It's
like
been so
what do you think some of the bigger mistakes are then that have went off
same.
in the past? Lessons
I
learned.
think for us, based on our mistakes, right?
Yeah.
We couldn't handle the kind of growth we saw. It was
Hmm.
tough to handle because growth brings a lot of challenges in terms
Yeah.
of people, process, and systems.
Yeah.
I don't think we were ready for that growth when we went into it.
Hmm.
And that is why we couldn't react fast enough to the increase in the debt markets like overnight. I think in couple of quarter, it went 4 times
Yeah.
crazy, right?
Yeah.
During 2022.
Yeah.
Uh, that is where we thought if we had better experience, we should have market research done well,
Mm.
read pulse of the market and everything. We were so involved and absorbed in only the property, and we're not worried about capital markets and other avenues like that,
Yeah.
right?
Yeah.
So I feel that was a challenge, one. Two, we did not anticipate the single family property management and the multi-family property management to be two different things.
Okay.
We got our ass handed back to us because of
Yeah.
that. We were under the impression scattered and all in one place, you manage it one kind. No, they're two different beasts, two different. Oh, they're all housing. It's just a matter of a tenant and manage the tenant.
Yeah.
No, they were two different type of ways. I'll give you an example. You cut a deal on a late rent with one tenant in a multifamily that goes viral in the community and everybody
Yeah.
wants that,
Everybody wants it.
right?
Yeah.
The single family on the other hand, you cut a deal, it's between the individual and the tenant and you. They don't
Yeah.
talk to anybody. So that little point, for example, costed us millions.
Mm.
In hindsight, no. That
Yeah.
was another pain point. I'll give you one last one.
Hmm.
I think not paying close attention to the details,
Hmm.
I feel costed us. They tell you not to pay attention to the details as you're growing as an entrepreneur, as a CEO, and everything. But frankly, these are minute details about how the contract looks, how the debt promissory note looks, and everything.
Yeah.
Small things, but they cost you a lot in the long run.
They do. They do. Yeah, I'm with you on that one. Like, I think me and Corey were talking about it, and I was taking a look at some debt, from years ago from something, and I was like, we got a multifamily loan. It was from a regional bank or a local bank in Hawaii. But there was something in there that was saying the asset, it was based on the net, the net worth and all the other stuff. And as the market changed and we had to mark to market the property, technically you're in default. I was saying like, hey, like you're in technical default if you have to mark your properties to market, the cap rate goes down to no fault of your own, the performance is the same. But now at some point when you do your quarterly report to the bank and you have to sit through those calls, I mean, these are things they're going to ask, like, hey, what are we going to do? Depending on where you're at. So
Mhm.
you're absolutely right, especially when every dollar could be worth $20 in value of the deal that you have, right? It does
Mhm.
matter. So that's interesting because I hear that a lot too, like from an entrepreneur. They're like, I don't worry about the details. And it's like, well, you better worry about them. Somebody's got to worry about them. Especially when you have other people,
Exactly.
when you have other people's money. That's a serious game. That is a serious
Mhm.
game. I always tell people like you can literally run over somebody in the crosswalk and get less jail time than screwing over people's money. So,
It is a painful, it is painful because
yeah.
you're more obligated. There's a lot of credibilities at stake, and then your reputation is everything.
Yeah, yeah. But you know what? I mean, I mean, I think real estate's a great business, probably like you guys too, or you wouldn't be in it. So I always tell people like, don't cry for us. We'll be okay. So, right, for sure. So, what's big that you guys are working on now? I know you guys are in the middle of the capital raise, but what are you guys going to be doing over this next, couple of years?
Yeah, we do have about 8 active projects between industrial and housing going on right now.
Yeah.
And then we have about 5 pipeline sites.
Mm.
And we have very aspirational technology to be
Yeah.
performed on these homes.
Okay.
I'm a tech guy. There's a thesis which we are trying to validate. How do we tokenize the funds, right?
We've been talking about that a lot lately. But so yeah, I'm interested in that. Definitely.
So we're putting some effort into a pilot we're doing on tokenization and digitizing the asset,
Hmm.
and putting the house or the asset on a blockchain
Yeah.
so that we can asset back the token with the blockchain.
Mm.
So we're kind of working a small thesis right now with a
Yeah.
bunch of folks who we recently hired as contractors, and they
Hmm.
are going to validate the thesis, validate the market need, and everything like that. Then we'll see more stuff, how these come out.
So is that going to change how people, two things, and I'm asking, for myself too, so I understand. Is that going to change how people invest in real estate? Because let's say you have a company, let's say you have set up a separate company, you raise capital, you have a different fund, and then you tokenize the real estate. The company that holds the real estate has its own revenue, right? So the
Mhm.
acquisition fees, management fees, whatever. Like, but the real estate has been tokenized. Can't people now, if that's on the blockchain and you were to trade that, could people just, trade the real estate and that takes away the need to go public or to have a REIT?
Yes. So
I like your
basically,
answer, man. You like, yes.
the world the world is your playground now. You can
Mm,
go and tokenize everything in the secondary market. You can do your property sale easily by just handing off an encryption key to somebody,
yeah.
and you can look at all the data on the blockchain, everything, all the 9 yards. You don't have to compile anything and everything. It is all
Wow.
there because you're putting history of facts, and you're creating trust and transparency of your property on the blockchain.
Mm, mm,
And then come due diligence, all you're opening up is all your financial health and your property health.
wow.
And if anybody wants all the history, they can go and dig into the history, right?
Yeah, yeah.
So if you see the thesis, it's more about how do you um, go about enabling these avenues of growth
Yeah.
for the company.
Wow. Wow.
So, but
That's
you
amazing
got
to
to
me.
be a differentiator. But you have to be a differentiator. See, if I go
Mhm.
capital raising, I'm just the 10th guy on the block asking for capital.
Yeah.
But if I go with a strong thesis, with an entrepreneurial mindset to create a better product and service the investor and
Yeah.
de-risk him, they'd be interested to at least talk to me. And once they talk to me, I'm pretty sure I'm able to convince them to go deploy with me.
Yeah. Yeah. Especially
Right?
with that. I mean, real estate, I was talking to somebody about this as well. I was just like, because I'm a limited partner in another fund, and that's what they're doing. They have a real estate Bitcoin fund, and I get the opportunity to hear kind of the beginning phases of what that looks like to be able to combine those two assets together in one fund. And
Nice.
it's opened up that conversation a lot more. Aside from just it being, kind of like Bitcoin, but now the digitization of real estate, and it's happening. So it feels like real estate and also the digitization, it'll really turn into a combination of a financial technology company. Yeah. And
So basically, it is like a stock, right? When you're buying Oracle stock, what do you look for? You look at the health of the company, you look at the financials of the company,
mhm,
right? And you trade the stock of Oracle or Microsoft or something.
Yeah.
Similarly, real estate investment companies stock in the future is going to look like show me the performance, show me the NOI,
Yeah.
and everything is in a blockchain, so it's trusted and everything. Earlier, real estate would never have been that open, but
Right.
now with AI and everything, everybody's forced to digitize everything. You have no choice. You're going to be left behind if you don't.
Yeah. Yeah. That's
So,
amazing. It almost feels like probably when you were working with Oracle and then moved over to the other tech company, like when everybody was like, yeah, I don't know how well the internet's going to do, or I don't know how well, like, the other social media platforms like Facebook and then MySpace went away. Like all of a sudden, it's like if you don't take advantage of that opportunity as it presents itself, you will miss the
mhm,
opportunity.
mhm.
That's
No,
crazy.
it's as simple as that. If you want a business, unfortunately, you have to keep growing. You have to
Mhm.
find new innovative ways to grow and
Yeah.
new innovative ways to raise, new innovative ways to keep the things going. And of course, we all are wired a certain way. We need to keep our juices flowing
Yeah.
and keep
Yeah.
our creative brains going. So we
Yeah.
need that for ourselves too.
Definitely. So do you think in the next decade that's going to be kind of the new thing that people are going to have to adjust their real estate portfolios to guys like us who are in the private equity real estate space? You think that's going to be mandatory at some point or they'll get lost?
I don't think it'll be mandatory. I think the world is moving towards that direction. I
Mm.
think it at least going to be a decade before some of the people get really, really caught up.
Yeah.
Um, I think especially we are in the development of the properties. So
Mm.
we basically get the opportunity to create partial IDs with the county and everything. And when we are at the initial stage, we are like, why don't we put this in the blockchain to start with?
Right. Right.
Right? That
Yeah.
is how we are thinking, right? Okay, can I put a node on a blockchain for every asset and I'm dumping a summarized version of the property health, the financial health onto that. Whenever I
Mm.
went and changed the HVAC, I'm going to put it that I changed the HVAC for X dollars,
Right.
right?
Yeah.
I serviced the property. I took care of my own investment property. I'll put it in there that I did a site visit. I did XYZ. So now
Yeah.
the history is there, the trust is there, the transparency is there.
Mm.
It'll make for a buyer and say, look, I did all these things.
Yeah.
Yes, right?
Wow.
So it's not easy. I know it may disrupt a few industries and
Yeah.
groups and everything. So it takes time. I think it's going there. It may take 20 years, 25, 10, 5. We'll
Hmm.
see.
Yeah, yeah. But no, I'm looking forward to it again because real estate's slow, steady. If you get the stuff we
Mhm.
look at is more stabilized, Class A assets in San Diego County,
Mhm.
things like that. But it's like
Okay.
combining that with the financial technology that now is if you don't play that game, you won't have a game to play. And it's like, how does it
Yeah.
fit? You have something heavy with something light. And in my head, I'm like, that's got to be the way to go because naturally, I'm building a firm, that hopefully outlives me and lasts me. But, I want this thing to be something that continues to go on through generations. And who knows, maybe my name goes away and it just becomes a bank or it's no longer, you
There
know,
you go.
yeah, yeah, for sure. But that means that we got to keep up with that. So that's interesting. So, man, I appreciate it. And I don't want to keep you too long, but I really enjoyed this conversation, man. You got me all fired up about some other ideas that we had that we were kind of introducing. But
Good.
that said, what do you think it's gonna take for anybody right now to be a major player in the space that you're playing in? Private equity, real estate, tokenization, things like that.
I would say experiment fast, fail fast, but try out new things. The world is at a point where a lot of many things are happening.
Hmm.
Change is inevitable. So the most important thing is not to stop being creative, thinking of how you can improve your NOI on a property. How can you optimize through software or optimize through better ways of transacting and doing business,
Yeah.
right? But don't stop thinking. Just because you hit your NOI for this year doesn't mean next year you have to think how you need to optimize on things,
Right.
right?
Right. Yeah.
So it is just the game of business. It's a very boring business. You have to increase your income and you have to lower your expenses. That's a very boring job.
Yeah.
So a better way to is to innovate on some things and go do some innovations. That way
Mm.
you can dramatically increase your NOIs.
Yeah. Yeah. Man, that's great. That's great. And that's for what you're saying is right. Like the things that are most successful are usually the most boring And once you kind of figure that out, then it's building on top of that. So that's cool. And thanks for that because I'm working on that now. And
Yep.
talking to you kind of actually gave me some ideas. So,
No,
man,
no, take it
I
there. Anything we can be helpful, let us know. More than happy to chat. I think there's a huge playground happening. There's a huge
mhm.
change happening. I'm sure people like us who have done it enough times can go reap the benefit of it in the good way and then encourage more the newer players coming in and make sure we're guiding them in the right way.
Right, right. So if somebody wanted to get in contact with you guys and have questions or anything like that, like how would they get in contact with you?
The best is to go to our website. There's a
Okay.
form there. You can fill it up. Just say you saw us on the Bill Capital podcast or wherever, and
Yeah.
then we'll be more than happy to engage as needed.
Okay. And that's 33holdings.com.
.com.
Okay,
Mhm.
33holdings.com. And that's 33, the number 33holdings.com. Perfect,
.com.
perfect. Well, hey
Yep.
man, I really appreciate you. I do, man. I love you guys. You guys are awesome. And I'll say this and then we'll jump. But I was telling Corey, I was like, when I got to that capital conference, I've always been a consumer of that capital. I've gotten loans, hard money loans, bank
Mhm.
financing, debt. So it was my first time going to a capital conference where I'm sitting with the guys who are controlling that capital. So I didn't really know like how to be because again, I'm like you. I'm rambunctious. I just run first into something and I'll figure it out later. Fail fast, figure it out. And when I'm connected with you and Corey, I think it was it was like all day everybody went to like a golf thing. And then in the evening
Mhm.
there was the cocktails and I got the opportunity to network. And I met you because you had on like that black kind of a felt
Well,
suit jacket. Apparently, that's your
I remember.
brand. Everybody knows you from that. Um, and then I met him, and you guys are so cool to me. Everybody else was kind of a little, who's this guy? But we stood up and we were talking, and so I appreciate that. At the time, I hadn't launched the fund. We were just kind of doing the syndication stuff and kind of just I was deciding where I wanted to go. But after I met you
Mhm.
guys, I was like, dude, that was important. That was a great meeting, and just talking, and I learned a lot too. So thank you for that. Thank you for being who you guys
No,
are and who you are and stuff like that, and staying in touch. But any way I can help out, I'm looking forward to it, man. And I'll be in your neck of the woods here soon because my daughter lives in Georgia. So I'm gonna
nice.
be
Come on
flying up.
in. Just give us a buzz.
Yeah, for sure. Well, cool, man. Anybody want to reach out to Sanjay, like I said, 33holdings.com. That's the best way to get in touch with them. And I'm looking forward to connecting with you personally myself too, man. Have a great day
Sure.
today. Cool.
Thank you, sir.